All right, mic check. Let's go back over quickly over what we did yesterday. This is our Grow Money Central Live. And again, let's do the disclaimer. Grow Money Central is an educational platform. Content is based on personal research and 20 plus years of trading and investing experience. Nothing on this site constitutes financial advice. And the content creator is not a licensed financial advisor. Always consult a qualified professional before making investment decisions. So we are live on with Grow Money Central. And again, here's our website with the tools for trading and courses. And here are some of the tools we talked about: the trade recorder, strategy back tester. We also have investing ideas as well. And let's look at the trades we took yesterday. That Euro JPY, that EJ trade went off pretty well. It took a while to get there, but it had to get through the London session open, and which is at 2 o'clock. And so we had a dip down. Did it take liquidity? No, it did not. Actually, I think it did. Hold on, let's check. No, it held. Okay, so it did not take liquidity. But as you can see, our stop loss was behind this mitigation block. So that would have prevented anything from taking us out. And if we're looking at the USD CAD trade, you got to move up into here. But you want to write this in your notes, is that whenever price does a move to the upside or moves far enough away from your entry point in structure, when it comes back and if it closes beyond your entry point, let's write this in here. This is your break even closing of the trade. So we would write in close the trade here. All right. So let's move this text here. So it was a good trade until it wasn't. So remember when I said I was looking at this trade, I was looking at this opportunity to go into this fair value gap. Well, I wanted to see that before it went down. Well, price went all the way back up and dipped into that fair value gap, and that was the catalyst to move it further down. So also, if you're looking at the market structure, we only had a level 1 move down, and then price moved back up, and it needed to create a level 2 because we're still in this market maker sequence. There is no lower low. This is the low, and then this is the lower low here. So we have a level 1 created. Now we need a level 2 created, and that actually happens here. This level 2, this is level 2. So that happened during London. So the trade during London, I wasn't around during London, but the trade during London was at 2 o'clock. You looked for that move into this fair value gap. And then once it closed outside of it, that was your entry. You also have a bearish mitigation block right here, which once price did not close beyond that, that would be your play to enter. I would probably wait for, let's see what we have. We got a level 1. Yeah, this is a level 2. So once price closed below this candle, that would be the move enter. Let's write it up so you all can see it. So during London, we have our level 2. And then we have our mitigation block right here. I know there's a lot of lipstick on this chart, but we got our interesting. The mitigation block ties right in with your level 2. So these are confirmations that price is going to basically react from this area. So we have price moving into that fair value gap. We got a level 2. We got a mitigation block. So there's so many confluences telling you that that it's got the move down. And so if we entered the trade here, and once you saw this occur, you could have gotten out right here. But definitely once price goes back to your origin, your entry of your trade, you want to close out if it closes below it. So that is what happened last night with USD CAD. But again, with EJ, it was a beautiful trade. We saw the setup. We got in. Price did go back. Similar situation. If you saw price close below your entry, let's move the text out of here. Price went up and it did not take the liquidity that we wanted. And was it at a 2-to-1 yet? Let's double check. I know we have a long. Let's just add another entry here just so we can see what's going on. And if we're looking at what we actually got from last night's session, we got let's bring the stop loss up to the correct position. Is this a 2-to-1? No. So it's a 1.5, 1.4. Yeah, 1.5. So if price makes this type of move and then comes back to your entry point, don't close out. This is definitely different from that USD CAD trade because you're still in a compression zone. We still got consolidation happening. We see with this USD CAD, this is an actual impulse move. We got a level 1 and a level 2, but with this EJ, we were in this compression zone and there wasn't any real extended impulse movement. So just because price comes back to your entry point and closes below it, that's not a reason to get out. You're wanting to see several things, and those things are this low right here invalidated. That's what you're looking for. You're looking for this low to be invalidated. If we look at the USD CAD trade, this is a whole different story. The whole impulse move right here got invalidated with that close below. So that's why you get out here on this USD CAD trade. On this EJ trade, this low held. So this is not a reason to get out. So you hold your trade, and you definitely want to at least hold to that 2-to-1 reward to risk, and that happens around here. So if you got a weak stomach and you got nervous, you could have gotten out here. But if you saw what we had talked about last night, we wanted EJ to go all the way up because there was a lot of liquidity. We got a lot of trend line liquidity, non-horizontal. We have vertical liquidity. So let's look at, again, we looked at the 1 hour chart to see that. If we're looking at the 1 hour, yeah, that's a full move. I would have taken some off here. Did we clear that? Did we take that liquidity? I don't think we took that liquidity. The high on this was 186.202. The high on this is 203. We took that liquidity. So that's why we got this move back down. But this move is not done. Remember, we saw that those equal highs. This is pretty much what you can call equal highs here. And if we're looking at our market maker move, let me take off this fib. So, actually, let me leave the fib on. If we go to 238, that would be a way to collect some profit. I would either have your target one, well, this is your target one really, and then your target two, TP2, would be probably around 238, and then TP3 is your 2618, or if you want to let it run longer, you can go to TikTok is telling me something. Okay, so you can let it run. I would probably let it run to, I'd probably get out at the 2618, because that is a nice full move. We're probably going to consolidate. The market maker move is done probably around that 2618. So we had our level 1. This is level 2. Level 2 always likes to dip back into level 1, and it did. And this is actually level 3 is completed on an hourly chart. So you might pull out here if you just want to take your profits. But I think you can probably hold to this 238. If I don't think price, well, I don't know. We don't ever know. But this is what we're looking for. This high right here is going to be, it can either hold, but if price closes above that high, that would be a move to that 238. And then you might see a capitulation back down. But this is pretty much the end of the market maker move. So, there is a reason to get out. But I think you can hold here. All right. So let's look and see what else is going on in the marketplace. First off, we need to check our news. So today is Friday, and 8:30 is coming up. There's a bunch of news. We got non-farm payroll. We got CAD news, unemployment rate. So CAD is really going to move today, or it's supposed to move today, but sometimes it might stall out just to fake traders out. So let's look at CAD one more time, and let's try to clean up here what we got. I'm going to take a couple pics here just so I can remind myself in my notes what happened. And again, for our website, if you go to the website and you go to tools up top here, you can record your trade that we took and download it as a CSV for your notes, and that will help you to learn from what happened from that trade. Of course, you always want to tag your losers, because those are the ones that really teach you. Your winners, you can learn how to pyramid. I think, did we pyramid on this one? I think I showed you where to pyramid on that. Let's go to, I'm going to 5 minute here. Yes, I did give you an area where you could have pyramided into the trade. If you're looking at this, let me show you another area where you can pyramid. So all of this type of price action here, it's very choppy, but if you look at it, it gives you entry opportunities. So we're looking at all of these low and lower low trades, and that's basically mitigation blocks. If you're looking at a low and then a lower low, and this is a low and this is a lower low, all of these bullish candles are basically mitigation blocks that can be mitigated, and that's why there's so much chop. It's because price is tapping into these mitigation blocks at every point. So if we look at the last mitigation block, which one is it? You all can tell me. Do you all see the last mitigation block here? It is right here. That is the last mitigation block right there. Now it's very big, but we're looking at the midpoint, which is right here. And if you can also look at the midpoint of the body, but let's draw it out. And what do you see? Price dipped right back into this mitigation block for one more time, coinciding with a fair value gap, and then giving you a nice big wick to the upside. And that's not an entry. So let me be clear right now. This is not your entry right here. Once that closes, that's not the entry. The entry is when price does this. When you see that move to the upside, giving you confirmation that we're moving higher, that's your entry. So I want you all to not jump into trades just because, oh, there's a wick. Yeah, there's a wick, but it could also go further. It had not gone to the midpoint, and this mitigation block is not mitigated yet. So I would have been looking for this as the entry, and then maybe another move up back into this. But price created this big fair value gap or set of fair value gaps, and then it went back into this mitigation block, and it didn't even go to the 50% level. So right now, this is not a trade for me. Didn't even go to 50% of the body. This is not a trade for me. So once price wicked outside of it and then gave you the indication, okay, we're going higher. That's a nice, it's not an engulfing candle, but it does engulf the body of this candle. So that would be your another pyramid entry. Let's copy this and put that here, so you can pyramid there. So this is a beautiful trade. It's great to see that we had a win and a loss, and it shows how the same trade setup can play out in a different way. And let's look for any opportunities here. What's EJ going to do? Is it going to continue? Let's draw it out. We got our trend line, break of structure. I do not think this is going down. Like I said, even though we did complete a market maker move, once you get another, let's see, we have, yes. So we take the swing highs, we draw our trend lines. We have broken the trend line. It's retested, it's coming out of it. We got a fair value gap. We want to look for our level 2s, and we want to look for our point of control. So if we're looking at this dead zone session between London and open early New York, what is the most volume? Where is the most volume? Right here. So we're looking for, where did that end? That terminated right here. So we draw out our point of control line, and let's look for level 2s. So this would be level 1. And is there another swing high? Yes, it's right here. So we are in a level 2. Let's draw it out. All right, so this is not a trade until price closes outside of this region. There is no point to enter this trade until price closes out of this region, because it's not telling you anything. Okay, now we're getting a move, and you see how it closed outside of this level 2 region and then rocketed all the way back in. That gives you some type of indication of what direction price is looking to go. Plus we're bullish. So let's see what happens. It is 8:11. Of course, non-farm payrolls is going to move everything. This is, I would not trade right now. This is a risky time period because the market can do whatever it wants. But let's just study price action and see what happens. And so we're looking how price is attempting to close. There's no point in even looking at it because it's 3 minutes left. So we want to wait for this candle to actually close. And that would be your Q. Now, is there anything preventing it from moving forward? This is level 2, so we have level 3. We got 1. Okay, so there is no level 2 up here yet. So it's actually pretty clear to run. I always try to look for trades where there is no level 2 up top. As you can see down here, when we were looking at this trade, there was no level 2 up. Oh, actually, let's see, it's a mitigation block. So let's bring this out just to clarify everything. So there was no level 2 up here. That means that we're looking for a level 3 to be created, which is what happened here. And remember, I told you all, actually, you all don't know, I said it in my YouTube live, and it's on my channel as well. We look for the move from level 2 to level 3 in a market maker model. That's what we look for, because as you can see, this is the cleanest run you're ever going to get. Level 1 to level 2, yeah, you get something. But this run is what I'm talking about. That's what you're looking for. You're looking for liquidity to be taken, which happened here, and you're looking for that move up. So going back to this trade, we had a level 2 created and a level 3, and then we start to count over on our candles. You get level 1 here, and then you get your level 2 here, and then level 3 has not been created. Sorry, I misspoke here. This is a level 2 right here. We didn't draw that out. So here's a level 2 that has actually been created. So, but that was not there when we started the trade. We started the trade during Asia, and there was no level 2 obstructing our pathway. Level 3 had terminated the market maker model, and we were looking for another jump up. So this all happened during the dead zone between Asia and London. And then at London, it happened right in the dead zone. So London is when the liquidity grab happened, and then price took off to the upside. So this is what you're looking for. Let's use this as an example. If you're looking at a level 2 and you've entered a trade and price did all this madness, it consolidated, and you're frustrated, you're saying, okay, should I get out of this trade? Remember, this is basically your point up. If price closes below this low that's been created here, that's your cue that price is actually trying to go down. It's going to reverse on you. But remember, it held. It took liquidity. It came right next to it. Let's see how many pips. Our low was 759. The low here is 1 pip, 760. So you had 1 pip away. Yeah, you should be sweating. I mean, that's just trading. But don't get out of it. Remember, our main stop loss is this mitigation block. Remember this candle right here. Let's zoom in so you can see it. Your stop loss is there for a reason. You have this mitigation block right here. You're putting your stop loss behind that. This is not a big area, so don't panic and don't over leverage. So you got your stop loss here, and you're looking at how price is moving. It didn't even go to 50% of your stop loss. So there's no reason to panic. You also have a nice fair value gap to protect you a little bit more. So these are things you can look for, and I would put it in your notes. Let's go back to our app here on the site, on the website. So you can put in your notes that that's the equity curve. Where are my notes? It's probably in the details section. There you go. You can put it in your notes that this is what was going on, and now you can learn from this opportunity, this trading opportunity. And again, remember we talk about level 2. Even though price closes beyond level 2, that's not the reason to get out of the trade. It is how price works. It wants to sort of manipulate you. It wants to make you think that something's happening. That's the whole point. And so, but this mitigation block is really what your last line of defense is. And so on this USD CAD loss, we look at price closing below your entry, but also below the origin point. That is definite get out of the trade now. That is the whole clue. And this is why ICT tells you to take partials. So you're up here, you're hitting this mitigation block and this order block here. There's a level 2 above. Remember on EJ, there was no level 2 up here when we started the trade. There was that form during the dead zone, but when we started the trade, this was here. So you want to watch out for what's obstructing your pathway, and then how does price react when it is in front of your pathway. And so this is what happened to this level 2. Boom. I mean, not even respecting it. It said you don't even exist. And it closed right outside of it. There was no meandering back and forth between both sides, which is what happens a lot. That already happened here before the London Open. So once price closed outside of this level 2 area, I mean, you're golden. And then you see that's the fair value gap. You see another big push to the upside. And then, like we said, this dip into this mitigation block right here. So yeah, take those lessons, and don't trade out of fear. That's also the other thing. If you're coming to the market and you have a lot of fear, which can happen. I mean, you get a lot of calluses that builds up from things happening in the market. You're on a string of losses. You lost big, maybe you didn't pay attention, made some errors. That happens, but don't build up calluses of fear. Have some type of practice to take you out of it. Some meditation practice, whatever it is. Go work out, do some push-ups, whatever you need to do to get out of that space. But you need to come to the market with an athlete's mindset. You need to think like, okay, whether you're a basketball, football, tennis, whatever fan sport you are, come to that with an athlete's mindset, and don't think that, don't work from defense. Yes, defense wins games, but you want to be aggressive when you're thinking, okay, how can I advance the ball? How can I advance what I'm working on? And if you're coming from that mindset, then you can start thinking about pyramiding your trade. This one trade could have, given you all of whatever you needed for the week. It could have met every goal that you wanted for the week. Everything was here, and it was pretty clean. It wasn't really a lot of noise going on. You're always going to have noise during the dead zone. So yeah, we took this trade at the end of Asia. So you're going to look for that. Okay, so the dead zone's coming up. Should I really be in this trade? So maybe you wait for London, because Asia's trade already happened. That was Asia's trade. And then price consolidated. So now you're looking for London's trade. And this was the liquidity that was set up for London. And remember the ICT power of three. You got your accumulation, manipulation, distribution. That's it. That's exactly what this was. The dead zone is usually that time to create that accumulation. So accumulation, manipulation, distribution. So that's what happened during Asia into London. And let's see what we're looking at. Okay. See, remember I told you, don't jump into the trade, wait for the close. It has to close outside of the region before you get in. And we're waiting for that 8:30 non-farm payroll. So let's see what's happening during that. Let's look at CAD, because CAD is going to be a really good mover, hopefully. Okay. So it's looking, let's look on a larger time frame to see where we are. Always look at your larger time frame. I think we got a lot of resources being used on my computer. What's going on here? CAD is taking too long. All right, well, let's reload it. All right, here we go. So if we're looking at what happened, we have a definite trend line break. Do we have any break of structure going on down here? We have this. Yeah, that's not a break of structure, even though you broke the trend line. Break of structure would have been a break below this low. A close below this low. Even though it did break it, it didn't close below. So that would be your break of structure. And we're looking, let's look again on this larger time frame. Let's look at the hourly chart. Let's get rid of this. That was our range from yesterday. And actually, let's get rid of some of these notes here. And okay, so yes, hide you, hide all of this. Which one? Yes, leave that up. Okay. So we're looking at, this is definitely a low. This is a lower low. So that is a level 1 created. This is a level 2 that was created. So the move that happened here, price closed above the level 2 on the hourly chart, dipped right back into that level 2 candle, and now we're moving up. So I don't know if that is going to be the actual move. We are in an uptrend. Technically, we're in a downtrend in the short term. We're in an uptrend in the long term. Okay. We also have this is a level 1, level 2, like we said. Is there any potential mitigation block that has not been mitigated? Did this close below here? It does not look so. What's the low on this? The low on this is 873, 38873. What's the close on this? 38872. So this did close below. Okay, so that's why we moved lower. This closed outside of this order block. And so when price went into around 50%, it stalled and then turned over. And that's how we get this impulse move, impulse move to the downside. So Is this going to continue to the downside? I don't think so. I think CAD is going to move higher, as evidenced by this big fat 1 hour candle. So let's look at any level twos that might be obstructing the. Nope. Okay, so there is nothing to block this from moving higher. So CAD looks like it's growing higher. If this closes, yeah, it might not even give you any structure because it's non-farm payroll. It might just do what it does. But we're looking for an hourly close above here to give you that that order block. If price closes above this candle, this is the order block that you're looking for to go back into. And this is actually the mitigation block. But let's see. Let's go back to our lower time frame. So now we have somewhat of a bias. We have a level 1 created. So that would have been the Q. Is this it? Yep. So took us a minute to find it. So we're in a level 3 right now. And that's why you see that big move. Remember what I told you. Level 2 is where we want to get involved. So we have level 1 created. We have a level 2 created. Draw it out. Here's our level 2. Level 2 was created right here. Then it closed out, which actually created a level 3. But in terms of the region, this is still a level 2 region. And then liquidity was taken. And this is our larger time frame level 2. So that's why you want to combine these higher and lower time frames, because it gives you the full context. And it keeps you from being scared. Again, you got to train. You got to, just like you have to know what you're up against. So what do athletes do? Take any sports metaphor. You always learn, go to the next match knowing what your opponent can do. You always study the tape. What does this team do? Or what does this other opponent do? If you're playing tennis or something like that, they have people scouting the other opponent so they know what to expect in the match. And that's what you're doing. You're doing your larger time frame analysis. You're scouting to see, okay, what's the landscape here. And then when you go in the lower time frame, you have that larger concept. I need to hit to this person's backhand because their backhand is weak, or this team has a bad defense, or if they show me this setup on the field, I know that setup for them is weak because I've watched the tape. Exactly what we're doing here. We're looking at what's the larger context, and the larger context is this is an hourly level 2. Okay, now it's 8:30. I got into my little spiel here. There we go. That was it. So we have level 2, level 3. That's a level 1. So we're gonna dip probably into 50% at least of this. Let me see what's going on. We got a 1, 2, and 3. Okay, if price closes below, we can. The wicks, the price movement is irrelevant. It's the wicks do the damage, the bodies tell the story. That's what ICT talks about. So this is the down move. Last up candle before the down move. This is it right here. So if price closes below this, we're going lower. If price holds, and we got 5, we got to wait the 5 minutes. We got 4 minutes left. So if price closes below this, then we're most likely going lower. I don't think it's going to use this as a mitigation block. Let's also look for where our point of control is with the most volume before the session, and that is right here. So this candle, to close on this candle, is our POC. All right, now let's look and see what's happening with EJ. Oops. We still did not close out of this. So once that occurred, or did we? Yeah, no, the price is still there. Okay. So let us look and see. We got 3 minutes left. Let's look and see what happens. And that would give us our clue. And this is not any advice, trading advice. Don't trade this. I mean, if you feel like it, that's up to you. But non-farm payroll does a lot of crazy, wonky things. So I would probably wait till a less crazy time to trade, more like CPI or something else. But you can get explosive moves, but just make sure your stop losses are in place. And let's see, if you entered this trade, your stop loss, of course, is behind here. And then your mental stop loss is this mitigation block that if it closes, and that's the thing, this, when you see wicks like this, the wicks do the damage. And so if you had your stop loss here and it actually closes above and goes in your direction, you would have been mad because your stop loss got hit. But that's what the wicks do. So yeah, you want to have a larger stop loss for these types of trades, and then you have your mental stop loss, but always wait for price to close. So we got about 2 minutes left before the close of this candle. And like I said, I'm bullish here for CAD. I think it's going to close above this mitigation block and outside of the hourly level 2 area. Did I put level 2? I don't think I put the text here. Maybe I did. No, I didn't. Okay. Now let's mark it up. So this is an hourly level 2. We got our point of control. We got our mitigation. Let's put that in there. So this is our 5-minute mitigation block. And let's see what happens. 1 minute left. Actually, 7 seconds left. All right, 3 seconds left. So did we close below it? We closed right at it. Not so. If I was a gambling man, I would say enter this trade right here. Stop loss here. And you're looking for a move to the upside. You want to take partials at right above here. This is your 2-to-1. It's more than 2-to-1. I would enter a trade and make sure we're looking at the larger structure. What's above us? There is a level 2 right here that has not been mitigated, so that would be it. Let's see. Yeah, so is there a level 2 over here? No. So this is your other terminus. This is your TP1, TP2. This is a small level 2. So if you're feeling adventurous, would probably put it beyond. Yeah, I would do a TP3 just because. You like to let your winners run. And again, your stop loss behind here. So TP1, 2, and 3. Now, in this instance, I'd probably use a fib to get my TP3. And the way I would measure it would be from, let's see, if we use this as your anchor point, this move downward, you would probably look at your 55618. So that would be your TP3. So there you go. There's your trade. Your non-farm payroll USD CAD trade. Euro JPY. I don't even know. What did it do? It must have stalled. Let me reload this page. EJ got messed up. Let's go back to EJ. Yeah, so EJ just tanked. Yep. Remember we said that that level 3 had been created on EJ. So you want to close out of your trade, especially if you get this break below this level 2. Let me write it up. Once you have that close below level 2, that is your Q. We've already closed outside of it once. It did not close outside of it on the upside at all. It was rejected, and then this closed outside of it again. That, remember, you can put that in your notes. If you're in a trade, you can close all positions right here. Close all positions. So if you're in this trade, you got this nice run from the London session, and the level 3 had been created, and then we're looking at this level 2 region, did not close outside of it to the upside after mitigating the other side, and it closed back outside of it again. That is your Q. This is something you see a lot too. This is another learning experience. The dip right back into that level 2 region. Where did it go? 50%. This is exactly 50%. The dip right back into this level 2 region to mitigate it. And then it went to the downside. So, and if you didn't get out and you saw this go all the way down, where did it go? It went right above your entry point. You're at break even. So if you missed it, you should have closed right there. And USD CAD, what are we doing? Okay, so we're hitting back into that level 2. Let's zoom it in. Let's get rid of this Fibonacci madness. Okay, so this is what we talked about earlier. If there's anything above you, especially a level 2 that's above you, that's always something that's going to have a little bit of trouble going through. And remember, we saw the other level 2 where it just clearly cut through it and didn't even respect it. This one, it's being respected. So let's wait and see what happens on the next candles. And again, our stop loss is, our mental stop loss is here. Right here. This is our mental stop loss. And if price closes beyond this mitigation block, we're out. So let's see what happens. So we're looking at this level 2. It's holding for now, but you never know. Okay. And you can't come to this, like I said, you can't come to this as, as like you're scared. You gotta be like an athlete. You gotta think like an athlete. Okay, what is this opponent doing? Okay, they're doing this, but there's no adjustments to be made at this point. We already know our game plan. Our game plan is set. We know exactly what we're doing, and this is what's playing out. What do we got? We still got 3 minutes left, so this is not going to give us any indication unless it just really takes off and goes bananas. This is not going to give any indication until 3 minutes from now. But it is non-farm payroll, so it could just say, it looks like it might just go bananas. Okay. So yeah, this trade is actually panning out very well. Let's look at EJ again. Yeah, that was a big move to the downside. Okay. So there's nothing really to see here. There's no more, nothing to really set up unless we're looking at the New York Open. We're just waiting for CAD to play out. So let's look and see if there's any opportunity for the New York Open on EJ. Got to move down, level 1, level 2, and then level 3. What did we say earlier? We want to get that move from level 2 to level 3. That's where the distribution is. And that's exactly what happened. So, yeah, there's nothing really set up unless we're looking at a possible move to the downside. That was a very big move to the downside. So, okay, so that closed below here. Yes, it did close below that level 1. All right, so this could be a move to the downside, but I want to see a level 2. There it is. There's the level 2 right here. All right, we have our region. If you watch our channel, our YouTube channel, go to the website, all the videos we talk about this level 2 region. That is pretty much the only thing you need to trade. Once you have your level 2 region, you'll know what price is going to do. So we closed outside of it. We're closing back into it. This is your mitigation block as well. Interesting. So we have our level 2 that is also a mitigation block. What is the mitigation block inside of it? Sorry. This is the, well, I drew up the wrong level 2. Okay, wait a second. Let's escape. This is the lower low. So this whole candle right here is your level 2. This is your mitigation block. The last down candle before the up move. Again, put that in your notes. The last down candle before the up move is your mitigation block. Let's get rid of this text here. Let's get rid of that. Let me just put this over here. Okay. Let's redraw this. That's your mitigation block. Let's close that out. Let's look at CAD. What's happening with CAD? Okay. So we closed outside of the level 2. And you'll see this too. Price will go right back in and tap the other side like it did just there. Just tapped it. Now we want to see that hold. Because if it closes outside of it and then goes all the way back into it, like it's doing now, that's something to make you nervous. So now you're nervous. And if it closes, no, we just started because it's just 4 minutes in. It may dip into this mitigation block. Yeah, it tapped that mitigation block. That's what it wanted to do. Okay, so you don't want to see it close anymore outside of this level 2. It already did that. But it can, like you said, the wicks do the damage. The bodies tell the story. So we're looking for what price is doing. Now, if price does a wick, okay, so this is nervous territory because we're wicking into the mitigation block and there's no reason for it. Okay, close your trade. This is a close your trade scenario because now we're wicking past this mitigation block that really has there's no reason unless it wants to go to 50% of this level 2, but that really isn't a reason for it. And like we said, non-farm payroll will fake you out. It'll do a lot of crazy things that it doesn't normally do, which is what's happening now. If it had designs of moving higher, it wouldn't do this. It wouldn't do all of this back and forth. But non-farm payroll will give you a lot of head fakes. But for me, knowing that it's non-farm payroll, number one, I wouldn't trade. But number two, I would probably close the trade at this point. Now, again, it could completely play out like we want it. You're at break even right now, so there's no hard feelings. But let's see what happens with this candle. Like we said, the wicks do the damage. So you don't want to be beat up by the wicks. So we got a minute and a half, and we want to see what happens. Now, if price does close outside of this level 2 area, if the wick goes all the way in here and then it closes outside of this level 2 area, you may be warranted in putting on a smaller position. I wouldn't risk a lot, but I would wait and see what happens when the body closes. But this is, what do we have here? Is there another area where there's a lot of price volume? Another lower area. So that would require us to look left. And, okay, let's go find another, yes, right here. There's another point of control. There is another point of control right here. Price closed right there. And this is another one right here. We're right at it. Okay. So this may give you support for holding your trade. This is yep, that's it right there. So let's drag that all the way over. Boy, that's far. Let's minimize. Okay, so let's draw this all the way over. And that's why you study your opponent. That is a point of control from, I don't know, a day or so ago, 2 days. Okay. So did this mitigation block hold? Almost. We haven't closed outside of it yet, but it didn't close below it. So let's see what happens. Let's see if it closes outside of it. And really, I wouldn't be as excited until we close above 50% of this level 2. You have to always preserve capital. So don't rush into a trade. Don't use your emotions. Use your mind. What is it telling you? What is the chart telling you? And let's see. Let's see what it does. And we're 3 minutes away from the end of the candle. Okay, so this gives you more confidence that it's moving to the upside. But again, you got to wait for it to close. So if this candle does the whole job of closing outside of the mitigation block, closing outside of this level 2, closing above this point of control and this point of control, now you have your confluences. I mean, everything is stacked in your favor. But we have to see what it does. And we're looking, what time is it? We got 2.5. Okay. Let's see what EJ's doing. EJ broke down. All right, so it closed outside of this level 2. Mitigated it some more. And let's see where we are in the market maker model. We've completed it. We've completed a market maker model. So we've done, let's see, 1, 2, and 3. Yeah, so we've done it. And then we get another level once, because sometimes you're going to get another market maker model. Wow, that's a lot of open space. I'm looking at it as a move into probably 50% of this region. Yeah, let's draw that out. We have, again, this is not a trade. This is just looking to see what price does. 50% of this region, yeah, to take that fair value gap. At least dip into it. So you could get a move into there, but that is definitely not a high probability. So, all right, CAD is doing what it's supposed to do. And non-farm payroll did exactly what it's supposed to do. Shake out the suckers. Shake out people who are not confident about their trade. So we got a minute left. So here's the other thing. So let's say you did exactly what we just talked about. You got in your trade. It did this madness. You got in here and then it went all the way against you. And then you got out at break even. Now you're seeing this activity. Most people, if you're not grounded, you will chase this. You'll jump in the trade. We got 30 seconds left. You'll chase it. You jump in the trade. You got to wait for it to close. This is a very key thing about learning how to trade, is that you got to wait for that candle to close. That's what tells you what price is doing. And we got 8 seconds. Let's see what happens. Alrighty, that is your cue. Now you can enter or wait for a pullback into this level 2, which you might not get because you've got all this mitigation going on. It's been mitigated. So you can enter here. And let's say our stop loss. So if we're entering this high out of where we're comfortable, where do you put your stop loss? Again, your stop loss is this mitigation block. So it was our mental mitigation block. Now it is our mental stop loss. Now it's our real stop loss. So that's where you put your stop loss. And if it takes you, it takes you. I mean, this is non-farm payroll. So, but we should not see any more movement to the downside. This should be a zero drawdown trade. And we're not even going to look at this as a potential area for target 1. TP1 is your opposing level 2 up here. TP2 is up here. TP3, let's make this a little bit bigger so we can see what's going on. Let's draw a fib out again so we know. Actually, TikTok just told me something. Okay. All right. So back to the charts here. Our TP2 would be this this level 2 that exists right here that has not been mitigated. Yep, hadn't been mitigated. So drawing our fib. Now that we have this big down closed order block, what you want to look for on the fib is that's perfect. 2618 right into that level 2. Your second level 2 happens at 3. Yeah, I would probably just close it out. I probably wouldn't look for a TP3 on this because you got 2 level 2s sitting right above. And let's see, is there, yeah, this is a nice strong level 2, so I don't know if that is, it may not even reach here. So if it takes this level, if it closes above this level 2, oh yeah, it's going to go higher. Sorry, I don't know what I'm thinking. We got equal highs. These equal highs need to be run. And yeah, so this is, yeah, it's going to go up into here to this fair value gap. And was this mitigated? This mitigation block? Let's look at it. Sorry, I got people mowing the lawn outside. Let's check and see if this was mitigated. Yes. So this, has it been mitigated to 50%? No, it hasn't. Aha. Let's double check. Make sure our magnets are working. Okay. So now I think that's the high. Come on. Give it to me. There it is. All right. 50% has not been mitigated. That's where we're going, folks. So don't look for TP3 there. Look for TP3 right there. So TP1, TP2, TP3. And that coincides with your 300 level on your fib. Well, y'all getting really loud. So let me mute this right now. moved away. Or they might be coming back. If you could do me a favor, though, and if you all could at least like the content and give me some comments on what you want to know more about or what you want me to cover, we could probably go into some more topics and some more trades. But that would be helpful. And let's see this play out. I'll go ahead and put the vibration, the music back on, because I think they're still going to come back a little bit, and we'll watch what happens for now. All right, let's look at this real quick. Just want to update you on this. So again, we looked at our mitigation blocks, and technically you can move your mental stop loss behind this mitigation block, but we have a fair value gap here, and we were behind this mitigation block. Now you can move it behind this fair value gap, and then once price closes above this mitigation candle, you can basically move your stop loss to break even right above where this mitigation block is, because if it comes back down here, then everything's pretty much invalidated. It should reach these TP levels now. It's all about capital preservation, of course. So yes, you're winning the trade, and this is where you got to get the emotional side and take it out, because if all of your planning still brings you to break even, at least you didn't lose, and that's fine. But everybody, of course, it's a human trait. We always want to have something to show for our efforts, not just a lesson. But sometimes that's all it is. That's all you're going to get is the lesson. But this is, if you're feeling nervous, then this is a decent move that we have here, and we're at halfway of our. This is a 4-to-1, so we're actually at 2-to-1. Actually, no, this is not our original. Let's go back to our stop loss, and our stop loss here, and let's get to our so we're not even at 2-to-1 yet. So yeah, you got to be able to hold for this. And I mean, if you lose, you lose. If you get break even, you break even. But you still want to get at least 2-to-1. Let's go back to our measurement here so we know when we have our 2-to-1. Yeah, that's 2-to-1. So you want to at least get a 2-to-1. So you're moving your stop loss behind this point of control and this fair value gap, which should hold. And price may move into that fair value gap. Like I said, this is non-farm payroll, folks. So the movement that we like to get doesn't always happen. And like I said, if you have any questions, go ahead and throw them up in the chat. Also, if you have some other folks that could learn from this information, go ahead and share that with them. And if you like what you're watching or like what you've heard, if you learned something, just give me a like. That would be helpful. It would help me help TikTok to know how to send out the content. All right, what's EJ doing? Turned over in a big way. So we had this level 3, then we had another level 1 created. Remember, lower low, and then this is currently the level. Wow, that's a big candle. Level 2 candle. Okay. And if price closes above this level 2 body, that might be an indication of a move upwards. But this is a very large region to try to contend with. So I don't like to mess around with large level 2 regions. Yeah, that's a lot. Okay, so yeah, so we're getting our move on on CAD to the upside. So this should play out. All right, so we're at 912. I'm going to start to get ready for the 9:30 open, and I'm going to probably look for some trades for the Russell 2000, and I talk about trading the Russell because it's more bang for your buck, because the other futures contracts on NASDAQ or the S&P, they're a little bit more rich and they require more capital. But if you trade the Russell, you get more, the contracts are smaller, they cost less. So I'm going to look for, let's get rid of EJ and let's look at the Russell, see what it's doing today before the open. Also, let me just look real quick, pre-market. I have some investment ideas on the site, and I told you all to check out DSP. This is a 5-minute chart. Let's get rid of this madness. Okay, so this is all right. So we're doing pretty good. You can go to the website, go to the tools, and look for the investments. Do I have that up there? Let's just pull it up anyway. And I give you investing ideas. This is the whole point of Grow Money Central. It's not just about trading. We talk about investing as well to help you grow your money. So where do you put your trading money? You put it in investments. And DAC was another asset we talked about. And so that's yesterday. So that hadn't played out yet. Okay. All right, let's see what the Russell is looking at. So let's go to an hourly chart. So I got a whole lot of markups on here because I was actually making some videos and doing some lessons. We had a nice trade yesterday on the Russell. Yeah, that was a nice big move. And okay, so we are still in this channel. Don't know if it's gonna go higher. We're in the midpoint of the channel. So let me pull up my other Russell that I do some drawings on. It's a little bit cleaner. Okay. So let's see where we are. We got some trend line support here. We have some trend line resistance here. And nice big old fair value gap that got mitigated. So we're at the mid. There is literally no direction of what's happening. Let's see where we are in the market maker, the most recent market maker model. We have level 1, 2, 3. We've got a level 1 created. So it would stand to reason that there might be a level 2 created up here, but that's not guaranteed. Yeah, if I was a gambling man, I would say we're looking at a possible move to the upside. Now let's go. This is the hourly chart. And to close above here to create a level 2. Let's see, we're at an hourly level 1, level 2. Wow, this is a big level 2 candle. Like I said, I don't like to deal with those, but yeah, this whole region is level 2. So if it closes outside of here, that you might try to get a move to the 50% of this, and then a close outside of it, or at least a move to the upside on there. This activity got mitigated. Well, this liquidity got taken. Sorry, that's what I meant to say. Is there a mitigation candle? Last up candle before the down move would be this one. That's a big mitigation candle. That doesn't give you a lot of room for your stop loss. So let's go down to the 5 minute, and we're currently at a level 1. Yeah, level 1 being created. So it would probably stand to reason that a level 2 might be created. Let's see. Is there any trend line support for? It might be some right here. It's a lot of noise going on here. So there's some trend line support for what's happening right now. So let's go down to the smaller time frame. Yeah, it's a big region. And we are at 1, 2, 3. We're at level 1. All right, so we should probably get a move to the downside to create a level 2. Let's see, 1, 2, 3, level 1. Yeah, we should create a level 2. That might take us to the 50% of this region, which would give us, let me just draw that in, 50%. Make sure that it's at 50%. Yeah, give or take. Let's move it up just a tad. There it is. There we go. So we're looking for price to hit that and then go back up. And we need to see the structure. Let's draw out the level 2 area. 1, 2. So this is level 2. It's all the way up there. All right. So also what happened during London. We need to find our point of control of the most recent session, which is this one. So it price closed here. Actually, that's London. Most recent session. Point of control is here. Okay. Interesting. Coincides with the level 2. So let's type it up. Level 2. Point of control. And we're also looking at 1, 2. This is on level 2. Remember, we do talk about it in some of the other videos on YouTube, how the level 2s always coincide. Well, not always, but typically coincide. So this level 2 to the upside, this level 2 to the downside, they coincided. So we'll just stick with this one. And we have this liquidity taken. So we're looking for that 930 open to basically move to the downside to either terminate here, or it could possibly go all the way to the other side of this level 2. What's CAD doing? CAD's turning over. CAD's waiting for that 930 open to finish its move. So we may see a move to this fair value gap. All right, so you should probably close trades and wait for that 930. You have profit. 930 is going to give you a push into here in this fair value gap. Just like we wicked this mitigation block, we're going to wick this one again. And it's going to close probably above this fair value gap, because your wick's going to do the damage. So I would, if you're adamant on holding, I would just close probably 70% of your position and then wait for that 930 open. You'll probably see some drawdown, but at least you got paid for it. All right, yes, so we're going to see a move down. All right, so let's wait for that 930 open. I'll be back. All right. Well, I'm going to go ahead and wrap now because I'm waiting for this IWM or Russell 2000 to turn around. So hopefully you got a lot out of today, and I'll see you on the next one.